Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Thursday, the 16th of May. Bulls win for a third day in a row. We did sell off of our intraday highs pretty much across the board, but we were able to reclaim the 50-day moving average on the S&P, of course, the NASDAQ as well. And good afternoon to you, Patricia. Hope you are doing well. Welcome out, everybody. I hope you had a great day, both in and out of the market. Earnings really kind of seem to set the tone, and then no news is good news, right? When it comes to the trade war stuff these days, Cisco comes out with a pretty solid earnings beat last night, and then Walmart here this morning with another earnings beat, and we really just kind of set a pretty positive tone for the market early in the trading day. As you can see here, looking at the heat map, for the most part, we find ourselves in the green here today. I would highlight the chip makers. They were one of the few areas that really were not taking part of much of the activity today. Some of the bigger losers on the day were in the semiconductor space: Intel, Texas Instruments, Broadcom. You've got Analog Devices, X-Links, so Micron. So they really kind of stood out as areas that really just were not tempting at all to the bulls here today, as pretty much buyers were, kind of gobbling up just about everything in the S&P 500 today. Certainly the chip makers were not part of it. On the earnings front this evening, we've got Applied Materials and NVIDIA reporting here tonight. Looks like first glance at both of them, it was positive. So quickly right after the bell, usually don't get the full picture, but it looked like NVIDIA beat on EPS, and that's what I caught there. And it looked like Applied Materials beat on revenue. That's as far as I was able to get in the 37 seconds before we go live for the market recap. And hi, Amy, good to see you. But it looks like a decent tone has set, at least at first glance, on Applied Materials and NVIDIA with their earnings. NVIDIA was pretty good after hours off of the initial response to the report. Tomorrow morning, we do have John Deere, another S&P 500 company, really light. Again, we're pretty light most days now on the earnings front. It's mostly a handful of names that are coming out every evening or morning. So not a huge slate, but certainly some interesting companies. We'll see if those chip makers coming out with earnings today maybe can make some of these stocks that really struggle today in that space maybe bounce back a little bit. We'll have to see where that one goes. So looking at the S&P, it was an interesting day. I mean, we really started with a lot of strength, kind of working through that 50-day moving average on the S&P 500, running up nicely for the first third or thereabouts of the day. I mean, it was super bullish early in the trading day, kind of flattened out and kind of started to drift towards the downside the second part of the trading day. So not the greatest close ever, but certainly I think an overall positive close. And if you'll notice, just looking at this 15-minute chart, this is the first time in a while we actually have something that kind of looks like an upward trend going on, right? We were kind of right at that trend line last night or after yesterday's close. Now, we still have some work to do, I think personally, but we now have actually started to show some signs of upward movement in the S&P 500 and pretty much most of the other components of the market as well. Taking a look at the hourly chart to see how that one's kind of shaking up. Again, you can kind of see we've kind of worked into this old top. Maybe if we can take out this top, and let me just, I probably shouldn't steal something off of the S&P 500. I'll just have to try to make it straight the first time. Not the worst line I've ever drawn. But maybe if we can take out this little top, could be another signal to the bulls. Maybe that's kind of where profit taking, maybe that was the technical reason at least, profit takers step back in. But we're showing a little bit more strength, I think, especially as we look at our intraday right now. We still have some work to do, but we were able to close above the 50 and actually the 9 EMA here today, which is kind of, because of the last 2 days in particular of movement, that 9 has already started from moving down to starting to hook up, right, if you will. Today's high, I think, will be something that we want to keep an eye on. We still have stuff ahead of us, right? And the trade war stuff, it's not going away. We have to kind of accept that it's the type of condition in the market that, the news can, scare people any given day. And I think it's wise that we continue to remember that, and we can hope it doesn't happen, and hope that we are, just being a little extra cautious. But I do think we need to kind of keep that in mind. If we can take out that high, today's high, we do have a few things, but we're starting to show some strength. I think what we're probably, what I'm hoping for at least, is a little bit of reasonable profit taking tomorrow, or a small bodied candle here tomorrow, kind of setting us up for a break of that resistance here next week. I think we can probably even look, and this might be a little too early to say, but kind of look to today's low as kind of that selling point from a short-term perspective as well. One thing I am comfortable saying right now, with the 3 days of upward movement that we saw off of this approximately 2,800, if this thing breaks, that's a clear bearish signal. This thing looks like it wants to hold. I'm comfortable saying that that is support now, not just it might hold, it should hold, it could hold, but with the upward movement, that is my line in the sand, so to speak. As long as we're holding that, I'm going to be, still be fairly, cautiously bullish, probably cautiously bullish until we take out these highs, will probably where I find myself. But as long as we hold support here, and I feel like with the movement we've seen off of these lows from Monday, we can call that a support zone. Moving into the Dow Jones, unlike the S&P, it still has a little more work to do. I was able to kind of work right into that 9 EMA here today. Still, I think the S&P and the NASDAQ chart are both much more appealing, to me at least, than the Dow Jones chart at this point. It's very mixed. Some of the stocks are solid, some of them are questionable, right? 3M not setting the world on fire, but Aflac is doing really well, right? And that's kind of what you're seeing over in the Dow Jones. Continuing to really look at the 50 and this old high as kind of those primary resistance zones. That 50-day moving average puts us just right above 26. And hey there, Jimbo, good to see you, buddy. And then, of course, number-wise, and probably every bit, if not more important in my mind, going to be the same old breakout point that we're watching for a breakout in not all that very long ago at about 26.2. So those are going to be the areas. Now, if we can kind of see some selling, and it's relatively light, and we're able to put in a higher low, kind of, and this is maybe not a perfect example, but it will work, where we kind of started to sell, we put in a higher low, and then started some upward movement. Maybe, and this isn't just on the Dow, this could be on a lot of things, could be an interesting signal. We're going to need a little bit of selling to see if that's the case. So really the 26.2 is the number I'm keeping an eye on, but I will watch that 50-day moving average because I always do, for better or worse. So over in the NASDAQ, certainly a very nice looking move off of yesterday, working right into resistance yesterday, right into that 50, and really powering through here today, showing very good strength. Many of the components, and we'll take a peek at a few of them when we get into the tech sector, had some pretty solid looking days in my mind here today. Very good start. I think you'll like where we are technically when you're looking at the market. I think the response that we've seen, it doesn't necessarily have to mean for tomorrow. You guys know me, I always want Friday to be super boring and reset on Monday for swing trades. But I think technically it was a pretty decent win these last 3 days. The storyline is still, for me at least, a relative concern because of the volatility. As we've kind of noted and seen most days, buyers seem to want this. They keep trying, and for the most part, they keep winning. And so I do expect that it's the type of conditions in the market where tomorrow we can gap down on the open until there's some sort of clarity on this trade war stuff. But I think if that can kind of stay out of the way, I think the bulls are going to remain in control with kind of the response to that Monday selling. And good afternoon, Scott. Hello there, Ed. Great to see you guys. I hope you are both doing well. over on the rut. And the biggest drawback to today's candle and the overall market, really any of the indexes, was how much we came off of the highs, right? We saw that on the S&P, but you're going to see it on pretty much everything. At one point, I mean, this was a beautiful green candle. Same on the, on the S&P, same on the NASDAQ. Weren't able to sustain that towards the end of the day. I mean, it's just throwing a little cold water, sure, but I'm not afraid to throw a little cold water. Specifically, when it comes to the rut, we're kind of right there at all of this old stuff, right? The old swing low, all of these moving averages. I still think the best way to look at the rut is we're sideways until we break that little fake out that we saw in early May, and then we're bullish. And that's kind of what I'm thinking personally with the rut. As long as we're between 15 and 16, just going to kind of treat it as if it is in a neutral range. Any given day is whatever. Beyond, if we can kind of take out that failed breakout, I will change my opinion very quickly to the upside. Below 15, certainly I would call that a sell signal. But I think really, if you think about the rut, and sometimes it helps, me at least, to kind of look at it on a weekly time frame. I mean, it's kind of one of those, it looks like we're weak, neutral with a side of bullish, right? And so interesting looking hammer candlestick developing on that weekly chart, though. I could, understand if some folks, if this was our tomorrow candle, liking some upward movement early next week. Still think that the rut is best served as sideways for the time being. So and yeah, Jimbo, we'll take a quick peek at Cisco and Pepsi. You won't have to talk me. Cisco is one of my favorite stocks, and well, who doesn't like a nice can of Pepsi when it's doing what when it's breaking out, right? So that's where we find ourselves on the index side of things. And again, we've seen these types of markets before, and I prefer markets like we were seeing in March and April, where you can have a really strong opinion. I really like tech. I'm shying away from healthcare type of stuff. I'm not a huge fan of what I call all or nothing markets, but I feel like that is what we are at least currently are in. And so when we look at most of the sector charts, it's going to be very, very similar. But one thing specifically in regards to XLB, we've talked a lot about this 54 zone, and with the way it's developed, I think we have to call it a zone, even though I want to call it 54. I think we can say that it's trying to hold for us here. So yeah, I would say so, Jimbo. Right on the Condor side of things, could be that's generally where I'm looking at on the Russell, but not always. Generally, I do prefer the larger size companies to the small cap companies, all things being equal personally, unless there's very clean signals, like a breakout signal. Well, I'll change my opinion. But yeah, I think it could make sense. I think it usually makes sense, honestly, Jimbo. But back to the XLB here, I think we can say that this support, at least as of right now, has held. It's going to be a little choppy to say where it gave up. I think a big victory will be if we can close above this 20 weekly. It's not going to be a deal breaker, but I do think it would be a victory because I think you could at least, I mean, this is way too deep of a retracement in my mind, coming back to the previous swing low, but that's just me. So if we can actually close, maybe there's going to be some temptation over there. This is a mixed space, as we've talked before. I'm not avoiding it really on either side, but I am taking a pretty cautious approach overall. But I think 54, or this 54 zone is what we have to call it, is something we can call support at this point in time. Still working at 56 at resistance. We'll want to keep an eye on that flat 200 because sometimes it can cause an issue. I don't expect it to, but that doesn't mean it won't. Really, for me, 56 is the next resistance. So there's room. There's still room for us to move to the upside in a lot of places in the market, in my mind. Over in energy, working right back and right into that old resistance level, kind of using that as the high point of the day. If we can get back through there, I think you could start making some bullish cases. I'm probably not going to make very strong bullish cases if it breaks to the upside, but I will call it a bullish signal if we're able to get back into this range. Once we get back in this range, I still think it's going to have to be called sideways, but I think if we, I think we can get back into at least a little bit of neutrality if, and only if, for me, we get on the right side of $65. At this point, if we see some selling tomorrow, I would not blame somebody if they looked at that as a bearish signal. Working right back into resistance after a breakdown, little bit of a, reverse hammer type of a candle. Obviously, we haven't seen any downward movement yet, but if we were to see downward movement tomorrow, I could understand why someone might say that that was a bearish retracement opportunity. I still think I want it to come out of this range, and I do want it to, what I'm looking for, or, I think with a good trading opportunity, I guess, better way to say it, because who knows what it's going to do, right? I think the trading opportunity is better to the downside personally, but we'll see. We'll see. A break above 65, I think we have to put it back into neutrality. A little bit of downward movement. I could see the argument for bearish retracement, but I feel like it's still kind of in a sideways situation. And if that is true, there's not a lot of profit potential on the retracement if that support actually holds. If that support breaks, there probably is some pretty good profit potential over there. Over in the financials, good solid day here, working right back towards that 9. Again, we're not out of the woods yet from a technical point of view, but we have held some support, seen some upward movement. You're really seeing some good movement in the insurances. I don't know if that's a word. The insurance companies, Aflac, after breaking out and really just continuing to run. Marsh and McKellen, I think is how you say their name, really knocking on the door of some resistance. So to me, I like the financial sector, but I'm leaning more towards these insurance companies, that particular industry as of right now, than the sector overall. It's not by a ton, but a lot of the strength that I'm seeing as I'm kind of looking through different components are in the insurance, at least relatively speaking. They look more appealing to me than, maybe broadly speaking, the banks or something along those lines. It doesn't necessarily mean I hate the the bigger banks, but again, these are just deeper type of pullbacks than I personally tend to like, and so that's going to be my natural bias shining through. But I do like what I'm seeing in the insurance, and I still feel pretty decent. This is still one of the areas that I guess I trust the most from a bullish point of view, for better or worse, or right or wrong. Right now, you're just kind of right or wrong market wide, right? It's the bulls, so whatever you like today is good, or bears, whatever you liked as a bear was good. But it is an area that I still find myself gravitating towards for potential bullish opportunities over certain other areas. Over in the industrials, we're able to get back above that 65. Now we're kind of fighting with these little resistance areas. All of a sudden, this becomes a pretty interesting place. Whereas, yesterday worried about 75, as a potential resistance catalyst. Today, we worked right back into those averages, reclaimed 75, which I think is a respectable level of resistance. I think that is a good sign from a bullish point of view. If we can clear out this last little bit, break above the 76, there's really nothing in the way until 77. I'm going to be cautious because things like Boeing, things like CAT in particular, can be hit a little harder than maybe average by some of the trade war type of stuff. Some of these companies, in my opinion, much like some of the semiconductor companies, can kind of get hit a little bit harder when that rears its ugly head. But I like the space. If we can take out 76, I really don't see any great technical reason why we don't work to 77. It's not a lot on the ETF, I know that, and it's not necessarily a ton on the individual components, but there is some room. I like when there's nothing above us. If we can reclaim that, that would be a show of strength anyway, with not a lot of resistance for a little ways. Could be something interesting going into the next couple of days if we can win that battle. On the other side of it, I think it's very clear that above 73, the 73 zone is our support. This thing breaks. That is a bearish signal in my opinion, and a pretty easy call. I will expect to be pretty darn bearish if that gives out. Now, I don't expect it to. That doesn't mean it won't. And I do believe that would be a pretty strong sell signal on the other side of it. So kind of still in the middle, really kind of sideways right now. Have to respect this 77. We all know this story. We've just tested that 77 so many times that I think it's foolish not to be watching out for it if and when we get there again. Over in the technology side of things, let's zoom this guy out a little bit. Let's talk a little bit positive, a little bit negative. So on a positive note, more positive than negative. On a positive note, reclaiming that 50 and that 9 EMA. Again, we're kind of seeing this with the fast movement these last 2 days. This 9 has had a chance to already start flipping around, that just 2 days ago so many of these 9 EMAs were working to the downside. So nice upward movement off of what has turned into a support zone. I think we can certainly say that this low down here at 73 is a support level worth monitoring. We reclaimed some of these moving averages. We weren't able to reclaim the resistance level. So that's going to be that next step in my mind. We need to get back above that. This could be one of those places. I'm not there at all, but this is one of those places, if I see selling here, I'm going to look back and say, yeah, that makes sense. With it breaking out, and we can say whatever we want. It did break out, and at least as of this very moment in time, it has failed that breakout, right? And so I have to be kind of a little bit concerned that this resistance could get into play again. Now, I don't expect it to, but it's one of those things that I want to be mindful of it, because if 3 days from now it struggled, it'll be one of those that, yeah, I should have paid a little more attention to that. If we can see a little bit more upward movement, though, that can change things quite a bit. Many of these companies look very solid. Microsoft, nice movement, kind of mimicking the overall market, still holding up its trend, higher highs, higher lows. Can't really complain about that. Apple not really taking part, not really doing a whole heck of a lot here at this point in time. Some of the, the Visas, MasterCards doing very nicely. I mean, you've got Visa knocking on the door of a new a new breakout point. Right? You have Intel. Well, Intel doesn't really count anymore for me until it starts to develop a bottom. So earnings gap, bunch of selling, impacted heavily by China. Yeah, this is something that not from a bullish point of view, at least, and hard to want to move into bearish today on something that's so extended to the downside. Doesn't mean it can't continue to drop. If I had to, I'd go bearish. I wouldn't feel great about it because I like Intel, the stock. So Cisco here, really strong movement here today off of that earnings, really good volume, good solid earnings beat, good solid stock. We've all probably followed Cisco on some level, working back, reclaiming everything off of that earnings. At this point in time, there's a couple ways that we can kind of look at trading into these post gaps, and they're always a little tougher in my opinion, because, well, my eyes look at it and say, wow, it went up too much, right? Too much for the short term. I'm not going to bet against it, but I don't dare buy it type of a deal. So for me, the next little pullback, is an opportunity to potentially look at a trading opportunity, a little consolidation, which is probably my favorite when we kind of go sideways for anywhere from 3 days to a couple of weeks, kind of clear, develop a pretty clear top and bottom and then break to the upside. That's typically how I look at those opportunities, Jimbo, personally. We could not get crazy and say, hey, if it goes above today's high, let's run into it. I think at this point in time, for me, it's either a consolidation pullback. If it's going to be a super runner, then I'm probably going to be looking at something like this as a potential breakout candidate. As of right now, it would need to break resistance for me. It's not that it's overextended. It's just that it's too extended for me, right? I'm not going to try to pretend that it can't continue to run, because I think that's foolish to assume that just because it went up a lot, it can't keep going up a lot, basically, Jimbo. But it's a little past my personal comfort zone. So I, usually, especially with resistance not too far ahead of us, we've got some resistance. These are all-time highs here, just north of $57. My concern is if I bought it here today, I've just got a lot of momentum. If someone takes profits, if the market sells tomorrow, I can only speak for myself. But if I were fortunate enough to have owned Cisco pre-earnings, which is not my style, but if I were, and it showed any weakness tomorrow, the market's seeing weakness tomorrow, I would take my profits. And I know I'm just one person and I don't speak for the market, but I assume other people who own Cisco would probably some of them would be thinking about it the same way, right? And so that's kind of the way that I'm looking. Yeah, I mean, the way you can look at it is, it doesn't mean you're right, Jimbo. It just means that that's where it is to you. I'm not going to go short on Intel with it being down so far. Does it mean it can't go? I'm not going to go short today on 3M with it being down so far. But you can darn well bet I'm not buying something that looks like that, right? And so it's okay that it's past my comfort zone. I'm just not trying to guess that it's time to go the other way, because that doesn't make any sense in my opinion. So when you use a term, I mean, it can be a little bit subjective, right? You could make the case that Cisco was overextended when it got into the breakout point, right? I mean, it went straight up. And so I think there's a little bit of subjectivity when it comes to that. I think the best way to look at it is it's past my comfort zone. Doesn't mean it's past yours. Doesn't mean it's past Ed's or Patricia's or anybody else's. Just means, yeah, I wouldn't do that. So I think best case scenario, something developed, we either drift up towards this 57 marker, kind of pull back there, make a little bit of a cup and handle type of pattern, a little bit of a high base pattern, and then breaking to the upside. I think you have to be concerned when you're looking at a chart like this. I mean, I wouldn't want to bet against Cisco, make no mistake about that. If you made me do something, I'd buy. But luckily, you can't make me do anything. And so that's kind of what I'd be looking, either a pullback, let these short-term averages catch up, or a little bit of a consolidation, let this 9 EMA catch up, or work into resistance, develop a potential breakout type of pattern, whether it's a high base, cup and handle, whatever it might be, and look for an entry at that point. And again, am I right to think that? Only time will tell, but that's the way I tend to like to play into those things. So hopefully that gives you some things to think about there on the Cisco side of things. But as you can see, I mean, we're seeing some decent things in tech. So if we can kind of push back above those highs on the ETF, it's not a big concern, but it is something that I think is worth monitoring, type of a deal. But things are looking pretty decent for the most part. Nice movement here over on Adobe here today, getting on the right side of its breakout, kind of basically much like the tech ETF, right? Yesterday closed right at that old resistance zone. Today pushed through and had some oomph to it. So liking the way that this is the sector shaping up, a little more upward movement would make me feel a little bit better from a bullish point of view. All righty, as we move into the staple side of things, really solid pop here today. Let's go into some of these companies here. Really solid pop, much like the market coming off of the highs, but I mean, we basically, let's come into a weekly chart for anybody who may be newer around here. We don't really have a lot of resistance on this ETF until we get to these all-time highs at approximately $59. So we're still showing a ton of strength, in my opinion, within this space, an area that I continue to really like in the marketplace as of right now. One of my favorite areas. Let's go take a peek here, kind of see what is going on here. Now you had PG breaking out, right? We talked a little bit about a nice clean breakout on PG. Pepsi, again, Jimbo, a nice just follow through. I mean, there's really not much you can say on something like Pepsi. Broke out of a consolidation period, just hit an all-time high above everything. It's hard to say anything other than, yeah, that's a pretty bullish chart. It's hard to really have any great insight on that side of things. Coca-Cola, while not a great trader's chart necessarily, I mean, it has just been screaming up the charts, just pushing through a little bit of resistance. All of a sudden, we're right back up to these highs. Let's peek into this, because this might be one that we can talk about as a trading opportunity in maybe a week or two. This is, potentially a triple top zone, right? Just approximately $50. We've got some work to do, and based off how it's moving, for goodness sake, that might happen as soon as tomorrow. But if we can see a little bit of development here, that could potentially be an interesting price over on that side of things. I don't know. I mean, Pepsi, I think, on the Pepsi side of things, a lot of it's going to come down to you, at this point in time. 132 would seem sensible. Generally, when I see something that goes sideways like Pepsi did here, Jimbo, I'll kind of look at the range for my first target. So our tops were here at about 128. And our bottoms were here at about 125. So I'm looking for it to, the first move to be the range itself, if that makes sense. So somewhere $3.50, expecting, the quote unquote easier move. So that's kind of where I would have it in mind for my first target, between 131 and 132. And I'd feel pretty comfortable with that overall personally. It doesn't make me right, but that is how I target when I'm coming out of a sideways range. If there's a clear range, that's my first target price. A lot of times that is my target price too. So for better or worse. So it'll depend. In this particular case, it's just on how it's moving, right? I don't think I think you have to take your targeting on a case-by-case basis. ATR sometimes, pays sometimes, sideways range sometimes, and that's how I, again, it's not to say I'm right, but that's how I would target really anything that looks like Pepsi, something that's gone into a little sideways range. I'll take that range, and that's my expected move coming out of the break, if in fact I get that break. Hopefully that makes sense, Jimbo. Good solid report on Walmart. Kind of a weird chart, right? But working right up to resistance at 104. Kind of messy right now. Not necessarily an easy thing to swing trade, but having a positive influence there. Then you have poor WBA, who we just now look at almost to feel sorry for. They just can't go up, it seems. And so they're kind of one of those. But Costco, was able to break, on the intraday, wasn't able to close it. It looks like I didn't check it second half of the day, but knocking on the door of the breakout. So Staples still seems like a very solid place for me overall to be looking at things from a bullish perspective. All right, utilities easy. Utilities are easy for me right now. 59, 57, you're trading in between using sideways strategies, or you're waiting for it to close below 57 or above 59 to give the signal. And so decent little day here today, as some utilities traders were buying in off of the little 2-day pullback. But for me, you can't really buy until, again, just speaking in general terms, some of these companies can still look very nice. But if these individual components that are already broken out are able to have this sector breakout with them, that should give them a little bit of extra oomph as well. So still 57, 59, still in that sideways range in the utility sector. Sideways or waiting for the break. Really interesting movement here in the healthcare sector, which continues to be a very odd place, in my opinion, right now. Certainly the place I generally am kind of thinking the least about, either bullish or bearish or neutral. Just basically look and say and see you tomorrow. But we did kind of work right back into this old range. So we now are starting to develop at least what might be our resistance zone. We were able to do hey, there you go, Ilka. Great to see you, buddy. Hope you're doing well. Got a little bit of support here at 87. We've tested this a few times. Now working back in today's high at around 89.30, potentially a resistance zone. Just one test, would need at least one more before we get there. Still in a weird spot, but we are seeing some upward movement off of this low. So yeah, and I think if you look at this area, it's just an area that you can work with. Okay, you just want to be careful with it. You have things like Pfizer, like you said. Pfizer has a pretty solid day here today. My problem with the sector as a whole is now Pfizer is in this weird limbo between these moving averages, right? Within kind of a little bit of a more sideways range. You have things like Johnson & Johnson that recently had a really good breakout, pulled back off of its 200-day moving average, but lots of stuff, that old resistance zone, these moving averages, and that's what you're seeing a lot. You see AbbVie, who did maybe just enough to get a super aggressive trader into the bearish breakdown on Monday. We didn't close that breakdown point, so I don't think it was a confirmed breakdown, but that is just my personal rules. But it's holding at that support level. So it continues to be a very mixed bag and a very confusing bag, in my opinion. I'm not afraid to say when I don't have a read on something at all, and I do not have a good read on the healthcare sector right now. Very messy spot, in my opinion, continues to be so overall. So yeah, I'm not going to really, I need a little more time development on that chart. Something will develop. That's the thing that you learn. Whatever happens next, good for anybody who's profiting from it. Sooner or later, something fairly recognizable will happen on the healthcare sector, and we'll get some potentially good opportunities when it does. Over in the discretionary sector, nice little pop here today, kind of working us back into this range. Again, we got to keep an eye on this 118, but we were able to recapture the 50-day moving average and even, I think, technically speaking, the 90 EMA over here. So again, seeing some nice upward movement. We've seen some support establish here in the market, an area that I still like. I don't like it as much right now as I like, the staples personally, but, it's kind of always, sometimes you like what you like, right? Home Depot with earnings next week. McDonald's so close to closing above 200, but not able to get the job done, closing at 199.99. So it broke 200 on the intraday, but wasn't able to close. Home Depot's got earnings here next week and not looking all that particularly great. We are seeing Amazon bounce off of that 50-period moving average, working into its averages. So Starbucks, just almost immortal. It seems like it was kind of immune to the pullback in the broad market. So still showing some pretty good strength. Little bit of earnings. We have Home Depot. I think we have TJ Maxx. And I think we have Target next week with earnings as well. So we're going to have some earnings on some of the larger components of this, the discretionary sector here next week. So still like it, still overall, as long as we're able to carry this momentum, hold this 50, going to be an area that I'm interested in, but I think other areas are a little bit more appealing right now. Over in the real estate side of things, working right into that resistance, smacked right into it, broke out on the intraday, closed right at the breakout point here by the end of the day. So push through that will be a bullish signal, but for me, for my rules, it has to close before the signal is there. But if we're interested in some of the REITs, this is not a bad time to go doing a little bit of shopping, see if there's anything out there that might be all that interesting to you. AMT, I think Emily brought this up yesterday. These guys have already broken out and are continuing their run. My favorite Prologis, coming off of a pullback. This is my favorite REIT to work with personally. This is usually, when it's real estate, this is usually what I look at. So I don't really follow a lot of the REITs. I usually work with Prologis myself. But you can kind of see there are some interesting charts out here. Some that are already broken out, some that are kind of knocking on the door. EQIX, I think they hit a new high today. Yeah, they hit a new high. So there are some interesting candidates out there if we can break through to give a little bit of a more follow through on the sector as a whole. We're certainly seeing some bullish momentum overall right now. A break above and a close above that resistance, I think you have to say that's a little bit of a bullish signal. Tradable, that's going to be up to us individually, but I would definitely call it a signal to the upside. And then lastly, over communication services, nice little move to the upside. Let's go look at a few of these guys just for fun in the communication services sector. You've got Facebook, they've showed that nice movement off of, with the hammer-ish type of candle that happened earlier in the week, kind of working into their moving averages, the bottom of that old gap out range. So looking decent, holding support, holding the 50-day moving average. Google really has been doing its part to fire back. Still think it's got some work to do to be a friendly chart to trade, but certainly the last 2 days and today's follow through off of yesterday's candle or something, I still wouldn't want to work with this. Personally, it's still not turned around, but it's showing at least some strengths. You've got Tim's favorite, Comcast, and a little bit of a flag type of a pattern developing. You've got Charter, who's actually breaking out here today. So you've got some pretty interesting things. You've got old EA. You guys know me. I don't mess around with the video game stocks, but after, knocking on the door of a breakdown, is working pretty darn close to that 200 period moving average, taking out a lot of things along the way. So we are seeing some decent strength within a lot of the individual components. And poor Netflix that finally was maybe thinking about breaking out, and then the market sold off on it. So it just can't seem to break out. So things are looking pretty decent over there as well overall in my mind. Certainly liking that area a little bit more than I usually do. With some of the strength that we're seeing over there. So, we're still kind of in that situation where we have the broad market storyline. We have to assume that it could rear its ugly head anytime because it hasn't gone away. We can see when it's not there, it's kind of business as usual, right? Bulls back in charge as per usual, but it is still there. We want to keep that in perspective as we're moving forward. We still have lots of options. Most of these things are showing, in my opinion, more bullish characteristics than bearish characteristics. Yes, some I think look a little bit better than others. You probably do too, even if you don't necessarily agree with the ones I like versus some of the others. And I think more bullish things are out there, but we do have a little bit of overhead in different resistance zones, old highs, things like that, on not just the ETFs, but on many of the stocks within those ETFs. So I think we just continue to do what we've been doing, being open to both sides of things, going with the charts. I'm still not opposed to be looking at, out of the money credit spreads, especially for my, bearish plays that are developing within this volatile market. So, that's where we find ourselves after a pretty, nice third day in a row. We did come off of those highs. It'll be interesting to see. If there's no news tomorrow, it'll be interesting to see how we close the week. The news that will make it anticlimactic. We'll go with the news, right? That tends to be the way that it works. Over in the VIX, more of a dip down here today. So we, at least according to the VIX, we're getting a little less volatile. I don't believe that as of yet. I will personally be preparing as if the trade war stuff can rear its head literally every time I wake up in the morning. But we did see a little bit of downward movement regardless of what my game plan is. Over in the dollar, nice movement. So this little pullback that developed early in the week has just continued to pay off for any of the US dollar traders. Now we're on the right side of this breakout point, pretty solid step in the right direction. Looking over at this weekly chart, we got one more day. But one thing that we've not been able to do since we had that first break on that first week, we've not been able to reclaim that breakout point. Be really interesting if we're able to hold this tomorrow and actually reclaim that breakout point. Very interesting in my opinion. Still like this overall from a bullish point of view. As you guys know, I don't think there's a great bearish argument against the dollar right now. Swing trading, I'm still waiting for that confirmation above the breakout point, but I'm very interested if we're able to do that. Over in the metals market, we finally bulls start stepping back in, bears start getting back into the metals. We're not out of the woodwork yet, but we are still kind of in the same general range. As I've said many times, this is not a very friendly area to trade in my opinion. But I could see something developing, and could being the operative word. Do we create a higher low somewhere in here, right? Based off today's candle, shouldn't expect it's going to be tomorrow, but we did kind of stop at that old breakout zone. We were able to hold that 20-day moving average. If something can develop in here for a little bit of time, I still believe there could be an interesting swing trading opportunity, but we need some time. We need it to develop, in my opinion. It can't be breaking on Monday or something like that. So I'll continue to say the same thing I have. Not a very trader friendly area. For the first time though, I could see something developing if we can spend a little bit of time in this 1288, 1290 range into this 1300 range. There could be something really either way, although bullish would probably be, and if we spend some serious time in here, would probably be the signal I'd be looking for. We'll have to see. Based off of today, shouldn't expect it to be tomorrow. But we were able to kind of hold that old breakout point. If we give way, if this falters, I could see an argument to try to be working back down. I just don't think that this is a very good example of a bearish retracement personally. So I won't be looking at it from that point of view. Silver really sold off here today after spending days, hanging around just below those moving averages. Today was the day that, okay, let's sell, taking out that swing low from not too terribly long ago, I guess early May, closing just right around 1450. I think 1450 is an area that we should just keep an eye on. Obviously not a buy zone, but just a big round number. So it could be an area for profit takers. But I think really if we're looking at our support at this point in time, if we give that out, zoom this guy up here a little bit of a choppy chart. So I'm kind of going with the whole numbers personally on silver. So 1450, if that gives out, 14.25 seems like the most likely outcome in my opinion. And if that gives out, 14 seems like the most likely outcome. So if we see a little more selling or a little retrace, maybe there could be something here. Again, the metals have been very difficult from a swing trading perspective, at least the way I like to trade. So I have been leaving them alone as of late, but you can't really argue with that downward movement that we saw here today in silver. Over natural gas, the story really here is that 50-day moving average and this 9 EMA weekly average, and that's exactly where our battle has been all week long. Right? It's going to be really interesting to see. As of right now, I think it's looking like most likely scenario is we close below them. But we're developing a little bit of a pinchy type of situation here, right? We're rising short-term, kind of flattened or falling longer-term moving average. This is interesting. It's still got lots of work to do, but this has been a really fun battle to watch, in my opinion. It's presented really good intraday opportunities this week in natural gas. Swing trading, I still think the battle is not yet decided. I think as we fight out at this, especially when we're looking at this on this weekly time frame, this is where I think we could start to argue that this is a bearish retracement if we see downward movement off of this, if this 9 weekly wins. Again, been a long time since we've closed on the positive side of that 9-weekly EMA. We'll see where this one goes. I expect to have fun talking about it tomorrow. I don't know, again, how practical, but for 30 seconds to a minute a day to talk at natural gas, it's fun. And one of these days we will get a really good signal. It's just, it's been a while on natural gas. So, and lastly, over in crude, we saw some decent movement. We took out that 62 yesterday, and we kind of filled that space up here today. So if we kind of go in and look at this hourly, let's go to 2 hourly just to kind of see how it all played out. So we kind of worked up and took out that 62 yesterday, filled up that space back into that 63 here today, kind of working into these old highs. So buyers are stepping back in on this pullback, actually looking kind of interesting right now on an intraday pullback, right? Pulling back into that intraday 9 hourly, seeing some upward movement off of that. I think we could look at potentially, if I'm interested in crude, I think you could potentially look at above today's high as an entry point on the pullback if you aren't already in here. Again, selfishly speaking, 2 or 3 days of a consolidation, then a break would be really nice. If that's the way that it wants to go, I would think it. But 63, just this high above our 63 here today would be kind of that next stop. If we can kind of work through there, technically at least, there's not a lot of reasons in my mind not to work back up to the 65, but honestly, I would expect to try to work into that high if I can capture a little bit more momentum. So I'm still liking crude as of right now, above 60s. I will probably continue to say that. It's just how do you get in, and that will depend on you and me and every other trader out there. So ladies and gentlemen, that is where we find ourselves after another decent day in the market. Not enough to make me forget how fearful the market can be and how fast it can go the other way. Just continue to trade what you see. All right, that's all we can really ever do, because who knows if there's going to be trade war news tomorrow? Who knows what the resolution is or when it is? Trade what you see, because, well, what else can you do, right? You can predict things, but you're probably not going to be very good at it, and that goes for all of us, so none of us are going to be able to predict the future. So continue to trade what you see. We're seeing some good opportunities. There's still going to be some good bearish opportunities out there as well. There's there were a dozen or so stocks that hit new S&P stocks that hit new 52-week lows yesterday. Now, only one did today, but there are still some bearish candidates out there. CVS is hanging out at support. You've got things kind of hanging out in support zones, and this will also open up the door potentially for some bearish retracements if we're finding some downward trending stocks already with 3 days of rally in the overall market. So should be fun. I'm looking forward to doing a good solid scanning here tomorrow. As you guys know, that's where I do most of my scanning for the next week. So I don't do a lot of scanning day to day. I always look at new 52-week highs and lows in the S&P, because I think that's a really easy way to find potential breakouts and just nice moving stocks in general. So many times the same companies are popping up. I throw them on the Tackle Trading Twitter, every day, and I notice that it's the same cast of characters over and over and over for the most part. So, I do run that scan pretty regularly, both for extended trends or potential breakouts or breakdowns. But most of my scanning I do on Saturday, or I'm sorry, on Friday, so I can just kind of stay on top of things during the week and spend more time messing around, talking trading with other people, looking at other people's charts, stuff like that. So I'm looking forward to see what kind of goodies we can find here tomorrow. So yeah, I'm with you, Ilka. I really do like that CVS as a bearish breakdown candidate. Certainly not there yet, may very well not be there, but a very clear floor, in my opinion, on CVS within a sideways range. That floor breaks, that would be a bearish signal, in my opinion, at least. And if we look at this on a longer term time frame, and this is one reason why I really like it, we just don't have a lot. I mean, anything could catch it, but there's not some glaring level of support $2 away or something like that to prop it up. And so those are certainly going to be things I'm going to be looking towards. I think it's RTN, another one that's somewhat similar, got a very clean floor, certainly hasn't broke it, very well may not. Those are generally the type of bearish patterns I prefer. You guys know me. I like to find things with good floors, let those floors give out, and then start talking. So, but I'll be looking forward to it. We'll kind of take a sneak peek tomorrow in our market recap here tomorrow. But with that, ladies and gentlemen, that is going to do it for today. But as always, thank you so much for joining me. I certainly appreciate everybody's time. Always great to see you guys. Always more fun to go through this process with you guys than on my own. So thanks for joining me. If you are new around here, of course, be sure to subscribe to the channel, hit that notification bell. Join us over on Twitter at Tackle Trading. Find me at FrankMartin23. Find Ilka. Find Jimbo. I see you guys all the time over there. It's a lot of fun to be able to just kind of, hey, this is a pretty cool looking chart. It's midnight. Oh, well, I'll throw it up there. Maybe someone will see it, So come on over and join us on Twitter. We have our cash flow club here tonight, so that should be fun. I think Gino's going to be running that today. So that ought to be a lot of fun for our pro members. If you're not a pro member, we certainly invite you to head on over to Tackle Trading. We'll get you hooked up with a free 15-day trial. Give us an email, team at Tackle Trading. Tell Mark that Frank sent you. Maybe he'll give you a little something extra. Who knows? So we'll certainly invite you to join us. Of course, the more the merry over there. And of course, you're always welcome to join us in our clubhouse as well. Another place where we can just talk trading with our trading community. So thank you all so much. It's always my pleasure. You guys have a fantastic Thursday afternoon. Enjoy the Cash Flow Club this evening. I will see you one more time for the week. Crazy how fast it goes. So one more time and the week will already be through. So get out of here, guys. Have a fantastic afternoon. I will see you same time and place here tomorrow. Bye, everybody.